Hey everybody, good morning. In today's video, we're going to talk about whether or not the stock market is way too giddy at this particular point. I can tell you that speaking to a lot of people, so many people feel like the stock market can't go down right now, which is just absolutely a horrible, horrible way to think. Because when you believe the market can't go down, that is usually when you end up getting the biggest moves in the other direction. Now, I want to be clear. I am not calling a stock market top. What I am doing, though, is coaching you on when I personally have taken some of my biggest losses in the markets, which have been two particular situations. Number one, when you kind of feel like the market can't go down. And number two is when you've had your biggest wins, which, let's face it, the market has been a rocket ship over the last 7 weeks. You kind of get complacent in your risk management because you kind of feel like you're invulnerable and you can't do anything wrong because the market is kind of doing us a favor right now. But this is when we got to really be on top of our risk management. And look, I've been there, just told you that I've had some of my biggest losses. And I guess I'm hungry this morning too. I said hello to everybody. And instead of saying good morning, I said food morning. So maybe it's time for breakfast. Maybe I got to wake up a little bit earlier. But what I'm really excited about here right now in this video is I'm going to walk you through what is probably one of the most exciting parts of our private community that we do, which is our end of year review. So we basically have 4 questions that I ask everybody to answer, and then we kind of have a back and forth where it turns into a coaching session for everybody who's in the community. And I just want to give you an idea how intense these coaching sessions are. And I'm going to give you the questions in just 1 second, but I just want to give you an idea of what these are. Last year's session was a 9.5-hour marathon of coaching of members of our community answering these questions, really, really thinking deeply through the questions, and then us having kind of a back and forth as a community. So what I want to do now is I want to inspire you to really think through what happened in 2023 in your trading, what worked, what didn't work, what you want to work on, and how that is going to look a year from now. Because actually what's kind of fun is we say, if we go back a year from now and we say, what does that look like? I want you to really kind of visualize that. And if you're like me, you're kind of like crazy about personal achievement. You kind of start to go back to the classics and go back to the stuff that's been around forever. I'm obviously a huge Napoleon Hill fan, but this is probably one of the first books that I personally got involved with. This is probably like mid 80s, if I'm not mistaken, when Anthony Robbins had all those infomercials with the cassette tapes and everything along those lines. Start to feed your mind before the year ends and carry that as a habit into next year. Because look, let's face it, there is so much mental energy expended when you're actually trading for a living or trading full time. And even if you're not full time, you're managing your money. There's ups and downs, there's doubts, there's highs, there's lows, there's all of those emotions that go through with it. And sometimes, just kind of getting back to the classics of getting yourself back on track really, really makes a big difference. So what I want to do right now is I want to work our way over into the questions that we talk about before we kind of break down what's going on in the market this year. And if you want, you can take kind of a screenshot of this. I'll actually post them down below in the video. So I want to start out with the very first one. What absolutely did not work for you this year? Give detail, open the wound, feel the pain, and pour salt into it. Now, this last quote here, big list of what doesn't work. That's actually a quote from Jesse Livermore in Reminiscences of a Stock Operator, where he basically said he tried everything, made a big list of what didn't work, and what was left over ended up being his trading strategy. So if you really think through this year, there was a lot of price action. We had bull markets this year, bear markets this year. Right now we're close to all-time highs in the S&P 500, which is just amazing. The one thing we do have to keep an eye on, though, this year is whether or not you took advantage of the very explosive catalyst that we had this year, which was obviously artificial intelligence. Asking yourself, is that within your core competency? Was that a part of your trading plan? Did you completely miss it because it blindsided you and you felt like you were too late to the party? So you got to write down what absolutely did not work. Now, this is really where this becomes really, really powerful. When I first started to do this way back in probably 2001, about a year after I started trading, I really wanted to kind of dive a little bit deeper and to see why I'm so talented. Why am I not achieving bigger success than I know I'm capable of? It came down to, I started to write all of the trades that I was taking, and then kind of really, that's why I said feel the pain and open the wound, right? Pour salt into the wound, because we have to admit where we're starting, and we have to admit what actions we're taking are not getting us closer to our goal. It's in those moments of bravery, for lack of a better way of putting it, when you are okay with learning from things that did not work out, that you instantly move yourself closer to profitability. So if you happen to be trading stocks and you feel like you're capable of so much more, it simply means that you're probably working hard, but you're not paying attention to what's working, and you're not doing less of what's not working. And I can tell you, as your friend, when you start to pay attention to that and eliminate, first reduce and then eliminate what you absolutely know in your heart is just not good trading, you instantly get closer to profitability, because now you're not digging yourself out of a hole on the good ideas, because you eliminated and got rid of those things that just clearly don't work. All right. So number two, what worked and resulted in your biggest wins? That's a very important part there, right? What steps and mindset shifts lead to consistent P&L? Also, what actions help you to lose less? Now, I can tell you, for me personally, a big part of getting to the other side and actually really getting profitable was game planning, which was really having a strategy that made sense to me. What I ultimately decided was my trading edge. And once you have that trading edge, this is really where it makes a big difference, is that when you have that edge and you believe in it, you believe that there's a probability of something happening more often than not, what ends up happening is, if you do it correctly, is you now have eliminated probably 90% of what's happening in the market. And now you're only looking for what you define as an edge. And again, one of the biggest things that people talk to us about when they come into our coaching program is the market is overwhelming. It's stressing me out, like all of those kinds of things. And generally speaking, it's overwhelming and stressing you out because you're trying to do everything. You're trying to read everything. You're trying to trade everything. You're in stocks, options, futures, Forex, crypto, like you're trying to do everything. And it's just not necessary to be successful. So again, go into your P&L. And this is a big thing I want to get across to you. You will be shocked at which stocks you're making the most money in, what situations you're making the most money in, what kinds of trade setups you're making the most money in. And then here's the shocker. Do more of that. Start to focus on what you're doing well and where you're actually making money. Number one, that will make the market easier, because now you're not looking for everything. You're saying, that's what I'm looking for. And only if I see that, then am I going to take money out of my wallet and start to trade those kinds of ideas. So when you combine those two things, understanding what definitely doesn't work, reducing and eliminating that, figuring out from your P&L what absolutely does work, and then narrowing your trading focus and your capital to just what is working for you. Oh my gosh, again, that's where you fall in love with trading again, and it becomes one of the most fun things you could possibly do. Those are only the first two questions. Next, we'll work our way over. Pretend it's December 31st, 2024. You've made massive improvements in your P&L growth. Now, again, that was very specifically worded, okay? Not, I feel like I'm better. You actually made more money. That's very specific, because look, we can all go through this loop of, oh, I'm so close, I'm so close, I'm so close, but not actually get profitable. So this is very massive improvements in your P&L growth. This means you actually reduced what didn't work, did more of what worked, and it showed up in your P&L. What 2 or 3 skills did you improve that produced that growth? So now we're getting a little bit more granular, which you're actually going to admit that trading is a skill. It's not just about having software. It's not just about having AI. It's not just about having the course. It's a skill that you're constantly working on day after day, trade by trade, week by week, month by month. What right now, based on the way that 2023 unfolded, and you have all that experience, what 2 or 3 skills did you improve that produced that actual growth in your P&L? Now, I could personally tell you, having done this for myself for a long time, and obviously having one of the most amazing communities online right now, besides having my trading floor, I will tell you that, number one, game planning. When you have an edge and you put on your calendar, this is the time of day I am going to look and review my existing open positions, make decisions, and then look for new ideas if I still have capital, that's a skill, because you start to fine tune what matters to you. And ultimately, and this is an important one, which stocks make it into your game plan to decide those are the ones I'm going to commit my focus and my time to. So that's a skill. Game planning is a skill. Number two, probably one of the bigger ones, is being flawless in your discipline on stocks that are not working out. So in other words, first, it's a mindset thing. And again, developing habits, it's a mindset thing that you have to learn to love and lock in your losses. They are keeping your inventory in your pocket and positioning yourself to be involved in the next skill, which I think is the biggest one, which is understanding how to maximize your wins. Now, again, maximizing your wins is not going to be important if you're not kicking out your losses and saying a trading loss is a business expense. Get it off of my books, get your capital back, and then go back to and go look for another idea, assuming that there are other ideas in that moment, which we're going to talk about that in a second in the big picture of the market. There is a lot going on from an economic perspective in the market this week, which, by the way, that's another big thing to understand. What kind of market conditions lead to the best trading? What kind of market conditions lead to the trading that will drive you crazy? We very much have on tap this week a lot of economic data, including the FOMC this week. And we spent a lot of time on our Saturday swing trade session where we review last week and then kind of set up this week, where this week can be one of those back and forth weeks where we might not end up going anywhere. But if you don't know that or pay attention to that, you can end up getting chopped up, lose a lot of money, look back on Friday and be like, what the heck did I do? The market didn't move and I lost a lot of money this week. So you got to know that going into the week, which takes me to the third skill: game planning, stop loss discipline, being mentally okay with that. And the third one, is understanding how to actually make money. Now, this is what separates people from being a chart reader into being a trader. Chart reading and trading is not the same thing. I don't know how many more times I could like bang my head on the table and say they are two completely different skills. Chart reading is looking at patterns and all that kind of cool stuff. Trading is very different. Trading is where we're making decisions on position sizing, how long we want to hold on to trades, what's the right initial position size, what's the right initial risk reward, where and when do we add to winning trades? Should we add to winning trades? What is our initial profit target to justify the risk? And then most importantly, how do we manage winning trades in a way that we can make so much more money on those wins in a formulaic way? In other words, we're not trading emotionally. We're not trading on that one big red candle that shakes out of the thing and then it goes up for the next 3 months. How do we learn to manage winning trades after we got all those other skills down? Game planning is a skill. Taking losses flawlessly is a skill. And number three, learning how to make more in your winning trades. And there's two ways to do that. Number one is being a little bit more aggressive with position size, which could mean a little bit more position size when you start. It could be adding to position size. And number two is learning how to hold good trades longer. Now, we have what's called a profit maximizer. And when you kind of strip out the fancy names and all those kinds of things, it's a very structured way of managing profitable trades. So what I would challenge you to do is, do you recognize the market conditions for whether or not you should be taking cash flow? In other words, that thing slows down, you hit the road, versus when it slows down, you're excited to add to that position because there's more on the table. And I'm going to show you a couple of different charts in that manner right now. So the fourth one, this is probably the one that's the most exciting. And again, if you want to take a screenshot of this, you can take a screenshot. The fourth one is the most important one. If you could retire because of your trading skills, what would you do with that time and money? And I think a lot of us really kind of forget sometimes that the whole reason we're doing this is because we want more of our time back. We want to be able to do what we want. We want to be able to go to a restaurant and not look at the price. We're like, no, that's the steak I want. And that's the loaded baked potato, and that's the expensive glass of wine, or I want to buy stuff for my grandkids. I want to get, whatever it happens to be. Maybe you just want to feel comfortable. Maybe you just want to be in control of your time and live life on your terms. What does that look like for you? Because if you've read the book, Start With Why by Simon Sinek, the book is so powerful because it talks about why are we doing this. Sometimes we get so caught up in life and we kind of forget where we become kind of robotic, and it becomes just like this process. Like if you remember the Flintstones, where Fred was like yabba dabba do, like every single day was the same thing over and over again. Gosh, that's not a fun life to live. So think about this. This last question is really, really important, and I'm just going to pull them all up on the screen for you again. If you could retire because of your trading skills, what would you do with that time and money? Now, if you're like most people that I know, the first thing is like, I'd buy my mom a house. Like all those kinds of nice altruistic things. But I want to challenge you now, and I want you to be selfish for a second. If you started making the kind of money that you dream about, and let's say you could retire comfortably, maybe even retire early because of your skills from the stock market, what would you do for yourself? What would you do for yourself, or what would you do for somebody else that really mattered to you? Visualize that, because sometimes that pulls you like a magnet through all of the adversity that we're going through. And that's kind of like our shining star above it. This is why I'm doing that. When you start to focus on that and you kind of put all four of these questions wrapped up together, you're going to find it's going to be a very emotional experience. And here's why it's going to be the most emotional experience, because you're going to start to realize that goal that you set on the bottom is more possible than you ever thought. And the only thing stopping you from getting there is actually going through these steps of, what do I need to do less? What am I doing really well? What skills do I want to work on? And then when all those three come together and you start to become net profitably consistently, gosh, I got to tell you, it's just an amazing, amazing place to be. And then think about how your life is going to change when that happens for you. So hopefully now, towards the end of the year, it's obviously second and a half week of December right now. Think about these things. Don't make it a resolution. Make it habits. Don't wait for January 1st to come around to be like, yeah, now I'm going to be somebody different. Be somebody different today. Really think about what's possible. Think about what's been the roadblock for you up to this point. Learn to eliminate that roadblock. Learn to narrow down and focus on what you do well and how you want to trade. That's another thing. Day trade, swing trade, position trade, earnings trade, news trade. Focus on that, and you'll be shocked this time next year how excited you're going to be about the year that just unfolded, because you intentionally and purposefully chose how you wanted to be a trader instead of trying to do everything that you possibly could have seen on YouTube or wherever else it happens to be. Choose what kind of trader you want to be, and then confidently move in that direction. And really, again, go through those four questions. I think you'll be very surprised how possible it seems when you kind of just figure out what's been holding you back and you start to fulfill your potential. That's a really big part of it. So why the big warning sign on today coming into the day? I will tell you that the market does seem like, and talking to a lot of people, that the market can't go down. We're starting to hear that language again, that I'm just staying long. The market is not going down ever. And I'm just going to, as soon as you start to hear that kind of conversation, that's when your spider sense has to start going up, and you really have to start being disciplined. So we're going to run through the market today. We're going to run through the market. We're going to run through the sectors. We're going to look at a couple of industry groups and look at some ideas. These Monday sessions are designed to have you kind of learn to think like a professional trader. So you're thinking more than just going through the top of your favorite scanner and saying, I'm looking to buy those stocks, and you're not paying attention to the rest of the market. I am not bearish. I want to be clear about that. What I'm talking about now is more a conversation about profit management, and to be thinking through what kind of profit you're thinking about right now, if and when the market starts to reverse. Now, the reason we're having this particular conversation is there is big, really big economic data coming out this week, and it could be a chop fest. That's the point that I want to get across. There's a lot of breakouts setting up, which I'm going to show you those in a couple of seconds. You need to be flawless on your trade management this week, but more importantly, you need to be paying attention to what kind of follow through we're getting from one day to the next, because as this week unfolds, I'm telling you now, it's setting up to be a indecisive back and forth kind of week with a lot of headlines. And I'm going to show you what those headlines are right now. I want to make sure I say hello to Ron. Ron is Amsterdam, one of our new members in our community. Ron, I just want to say thank you so much for becoming an official member after we spoke last week. It means a lot to me. I just can't wait to help you. So let's start talking about what's going on in the market this week. Okay, so we kind of work our way down into what's going on. So potential week of nasty volatility. So what does that mean? So if we kind of work our way over here into the economic calendar for this week and really think through. Now, if you're day trading, very, very important to know that the 10-year auction is coming out this week. Now, if you've been watching, especially from a day trading perspective or even from a headline perspective, the last 3 10-year auctions have been a bomb. There's been no demand and the market just basically crashed. So if you happen to, when I say crashed, I'm talking about from a day trading perspective where we're trading at the highs and then over the next 3 hours, that thing just melts down to the lows, and even violently down to the lows. The VIX goes up, the advanced decline lows goes down, the New York Stock Exchange tick readings start to print bigger negative numbers. Keep an eye on that, especially today at 1 o'clock Eastern. Very big, very important to know if you're a day trader. Longer term, maybe not necessarily something that is a monster part of your day, but you need to know that, okay? Now, this is where we start to get a little bit more into the back and forth and what could potentially be moving the market, which quite frankly could also be content. What I'm telling you right now, I'm just going to go right out and say, I think it's going to be a choppy week. So I just want to put that out there, right? All right, CPI data coming out in a 30-year bond auction, CPI data tomorrow morning. So what also is the reason why this is important? We have a lot of stocks that have not caught their breath. They're going up and going up and going up and going up and no declines at all. The economic data coming out this week could potentially rock the market if Jerome Powell continues. And again, this is a big thing. When somebody tells you who they are, listen, right? It's not my quote. It's one of my wife's girlfriend's quotes. Jerome Powell keeps talking about higher for longer. And a lot of people right now are chasing the gains from the last few weeks. Fund managers are playing catch up because they missed that initial move to the upside. But Jerome Powell has not changed what he says they plan to do. Got to pay attention to that. So kind of leading into that, leading into before the FOMC comes out on Wednesday, we have CPI data, month over month, year over year. So we're going to get more inflation data that will likely influence when the FOMC meets over these 2 days and then ultimately makes the announcement on Wednesday afternoon at 2 o'clock. So we got 10-year note has not been good. There hasn't been demand. CPI data coming out on Tuesday. Crude oil inventory, another big conversation. We've been talking about that quite a bit, actually. If we kind of, I don't have my chart up here. I can't believe I forgot to do that. Pulling up the other chart of the market. If we take a look at crude oil right now, there's still some pretty big support down here, right? Not necessarily ready to crash the way everybody's talking about it. We're going to see that. Does the crude oil inventory start to spark the energy sector to the upside? So here's the big thing I want to get across now. If you understand the different phases of price action, which we talk about quite a bit, order flow stacking works in the context of only 4 different types of price action. There's the markup and the markdown, which you know is uptrends and downtrends. But then the 2 reversal patterns are what is known as accumulation and distribution. After a move to the upside, a heavy wide trading range on bigger volume throughout that trading range is typically distribution, which means you lead to a move down in the other direction. But I think the most exciting one is one that's called accumulation. Accumulation is after a downtrend, when you start to see a stock go sideways, and during that sideways price action, you should look at it and in a heartbeat, like, wow, that's really big volume during that trading range. That is generally accumulation, and accumulation generally leads to a move to the upside. It's a changing of hands from that downtrend to buying pressure that eventually leads to a new move to the upside. I'm going to give you a chart that we're kind of seeing that right now. It's pretty obvious. So you can see crude oil futures have this big support level here, right? But I want to show you Chevron. Now, just looking at the surface, you're like, oh my gosh, big move to the downside, right? But let's take a look at this. Look at this volume during this trading range. That's accumulation. You know, we talk a lot about print that chart out. Print that chart out. That's really interesting. Now, I want to talk about why this is happening. What ends up happening is there's selling pressure, and as it's going down, supply is being dumped onto the market, and sellers are getting rid of their inventory. But at some point, somebody is stepping in and saying, you know what, I like this going forward, and I'm going to start buying passively while it's still going down. So this is what the institutions are doing. They're literally stepping in and saying, I'm going to start accumulating a position down here. While they're actively selling, they're just going to sit there. And if you remember the movie Trading Places, they're like, buy them, buy them, buy them. Dan Aykroyd and Eddie Murphy would just buy them, buy them, buy them. They were basically just buying everybody who was selling, sitting there passively on the bid. But what ends up happening, let's use PB Martin as an example. So let's say PB is a hedge fund and he needs to buy 10 million shares, but the selling kind of slows down because it's not going down anymore. Now he needs more shares. So what ends up happening is after this extended move to the side, he's like now got to be responsible for getting that extra 5 million shares or whatever it happens to be. He now has to start paying up because the selling dried up. And that's where we end up seeing a breakout leading to a new uptrend, which we call as a markup. So tying all that together in crude oil with Chevron at this particular moment, that means that we have an alert set for Chevron around the 147, 148 level. There's nothing to do inside this range because you'd be chopped up. But what we do need to do is pay attention to this and have an alert set for this. Now, I want to be clear about this. This is what's really separating somebody who's a trader from somebody who's a chart reader. That is known as the process of building an argument, building reasons to look at a particular trade. Sometimes they work out perfectly, sometimes they don't. That's trading in the real world. The more reasons we could put into a trade, the more conviction we'll have for the trade, maybe the more position size we'll have for the trade, the more maybe we'll add to that trade as it moves in our favor, right? If the trade starts, first of all, if it never unfolds that way, you just leave it alone. That's fine. You put all these reasons into the trade, and if it doesn't continues to go sideways, you just leave it alone. But this is really the difference, okay? What if everything you mapped out, reason 1, reason 2, reason 3, reason 4, right? Crude oil holding support, crude oil breaking the move to the upside, a lot of energy stocks start to pop to the upside. What if, just what if, what you expect to have happen does? Now, this is what will separate you from everybody else who's like, I just can't seem to make money. I take 5 steps forward, 5 steps back. The stock market doesn't work. It stinks. Nobody's making money. This is where you'll separate yourself from everybody else, because we have this all the time. One of the top questions we get in the markets is, how do I trade the open? How do I trade with conviction? I'm telling you right now, the way that you do that is to be prepared to make a decision before you need to make that decision so that you're not shocked. You're literally going into the day. And again, we'll take a look at Chevron. If this thing happens to turn around and matches all the criteria you're looking at, we are now ready to make a decision before it happens. That's stage 1 of being different from everybody else who says you can't make money. Stage 2 is actually taking that trade with conviction and having the guts to get in there and say, everything I wanted in this idea is unfolding. I got to go get paid. So you can't tiptoe in. You can't make a little bit of money. This is one of those situations where everything you wrote down, 1, 2, 3, 4, 5, oh my gosh, everything's there. Go get paid. That is part 1 of all those 4 questions we talked about before. Part 2 is if none of that is there and you still overtrade, you have to stop that. So when you learn to lose less because you eliminate what's not working and learn to game plan and flawlessly go out and trade when what you expected to happen happens, that's when trading becomes fun. That's when you sit back, you watch your positions, you have your coffee, and you're not stressed out of your mind. Why? Because you know what you need to do before you need to do it, which takes us into today. Today and this week. I am telling you, this week is setting up to be a choppy, heavy volume, back and forth mess because, number 1, everybody's waiting to see what's happening, right? What is Jerome Powell going to say? What are they going to do? Are they going to validate everything? Is he going to say something differently in the press conference at 2:30? What are the CPI numbers going to be? What are the crude oil numbers going to be? What are the unemployment numbers going to be? There's a lot unfolding this week. So I am literally telling you, you are now looking at your GPS on your phone, right? You got your phone and you're looking up and you're like, oh my gosh, look at all that traffic ahead. You got to pay attention. So we know going into this week, that's the kind of conviction that we are looking at. A lot of this back and forth this week. So if you know there's a traffic jam in front of you, at least that's what it looks like on the GPS, you have to trade correct position size. You have to trade correct initial profit targets, knowing with all of that stuff mapped out for us as economic data coming out this week. That's where you separate yourself from everybody else because you're like, look, there's rain coming. I better bring my umbrella. If you know it's going to rain and you don't bring your umbrella, that's on you. So now, again, we're talking about this way before the market even opens for the week. So now let's start to get into some ideas. And this is really where you can take a screenshot of this stuff and look at some of the ideas for the week. So we just broke down what I'm looking for in the market this week. Now, obviously, we're going to break down the sectors. So now we're looking at in the sectors, we're going to be starting out with financial stocks lining up with some convenient pauses for Monday, setting up breakout trades. So we're going to be starting out with PNC. Nice breakout here last week, nice 4-day pause and room to go. So as we're setting up this week and looking for some opportunities this week, I am looking for some of the lower risk type opportunities with profit potential. I am not necessarily looking for some of the more volatile opportunities this week that have been kind of trading back and forth, because right now for me, it's a little bit extended and a little bit harder to manage the downside. So as I'm looking at these ideas, PNC, a multiple day, 4-day pause here. My risk is managed. My profit potential is managed, as well as the sector itself is showing good relative strength as a group. JP Morgan, we've been watching this 158 level probably for almost a month now, maybe a little bit more. This pause led to this move up to 158. If you remember, we said 158. Above 158 makes a better swing trade. I'm not looking to do anything until we pause at that level. Well, JP Morgan is now pausing at 158 with room to go. Okay. And by the way, if you attended our webinar last week with David Trainer, David spent a lot of time talking about JP Morgan having financials that are just rock solid. So this is a good fundamentally sound company as well. Adding to the list of financial stocks. So you notice what we're doing right now. We're focusing on where there's more stacked order flow, but also have obvious entries at this particular point. KKR, WAL, Schwab, and Goldman Sachs adding to the list. You can see Schwab here, very, very similar pattern that we just looked at. And another one, WAL, is another one that right here, right at this big breakout level with plenty of room to go. You can see that there's some really nice profit potential here. So the first trade, the aggressive trade, was here coming out of this breakout, gave it this beautiful, beautiful, what we call energy candlestick. And then guess what? It paused for another 4 days, gave us another entry on Friday, and gave us another really nice energy candlestick. So when you start to train yourself to notice these things at resistance, pause, energy candlestick, pause, consolidation, breakout, you start to see money. You start to see money actually being allocated. And this one actually happens to have some nice room to go in a pretty solid sector. And we're also talking about Schwab. We're talking about KKR. So there's some opportunities that are still at or near an optimal entry that we're looking for. Now, one that is not, that has just exploded this as an industry group, Lennar. Lennar had this big bullish gap, pause, bullish gap, pause for 2 weeks. And before it broke out here, it gave us a 2.5 week pause. And now we have 7 consecutive days. Now, this whole industry group is on fire together, which is residential construction stocks. So you got Lennar, Toll Brothers, DHI, a bunch of those stocks all trading together right now. But again, you go into your economic data and you take a look at earnings this week. And Lennar actually has earnings scheduled for Thursday afternoon. So you need to know that the stock is flying into new levels into earnings. So now you have to say to yourself, are the earnings priced in for this week? So you're starting to see how we're 4 days ahead of making a trading decision, so that it's not 3:30 in the afternoon on Thursday and an hour before they're about to announce earnings. And you're like looking all over social media. What do I do with Lennar? What do I do with Lennar? Earnings are coming out in 20 minutes. You got to know that now. Remember we talked about one of those 4 things, understanding what is creating that bigger P&L growth for you. These kinds of decisions before you need to make them are what will separate you from everybody else who says the market's too hard. I don't understand it. Why? Because you're prepared to make a decision before you need. Now, none of this is complicated. There's no indicators on my chart at all other than volume. Once in a while, we look at moving averages and a couple of other things, but I want pure price action. I want to know what's going on. All right. Okay. So financials, technology. Obviously, technology is still dominating. If we go into the list of stocks with bullish order flow, you could take a screenshot of this. Technology is still pretty dominant as far as the amounts of stocks that have bullish stacked order flow. If we go over to the sector list of stocks with bullish order flow. You can see technology is still at the top. Industrials has been up there pretty strong, but I think Boeing's a little bit extended at this point. We're probably going to see a little bit of consolidation. If you take a look at what Boeing has done, absolutely amazing after this failed earnings breakdown. General Electric, I think, is giving us a little bit better picture here because it's kind of can't make up its mind right now. A bunch of melted candles, a breakout, a big pullback, melted candle, a bullish on Friday and rallying again. We need to get away from 120 for me to have a little bit more conviction in GE. So let's get back into some of the tech stocks that we are actually looking at. DocuSign had massive attention on Friday. And if you take a look at what that candle looked like here, there's what's known as a bullish engulfing candlestick. It took out the low, took out the high, closed near the highs. Now, this is really where, again, setting up a trading plan versus a tracking journal. I love this idea, but I don't love this idea until we get at least up to 53. And then I like it from 53 to 66. So I'm not trading it during this chaotic volatility. I want it to pause up at this level before I look for it to make a run over here. And you can see that we actually kind of map that trade out over here. So I'm actually now, again, being prepared with the price, and I'm not going to do anything until it gets then. And now this is why. I don't feel like after that big day on Friday with this massive, crazy volatility, I could manage my downside. I want to see a little bit more clean price action that allows me to manage my risk as well as sets up a new opportunity to make money. And for me right now, that's up in this area over here. So I hope that what I just said really hit home for you, because I want to make that difference for you, that there's scanning for ideas that match your edge. Then the next part is your trading game plan, which are ideas that are valid today. They're near an optimal entry and have sufficient profit potential. But then there's the tracking journal, which is the third one. So stocks that might meet your scan might not be ready to go into your game plan today, but you need to track them still and set alerts that if they hit a certain price, then you're good to go. So they're still in your universe, but not necessarily the risk reward that you like at this moment. Again, elevating your game. Go back to that list of 4 things I mentioned at the beginning of today's call. What is a skill that's going to change things for you that will make your P&L grow? Having a tracking journal of good ideas that aren't necessarily ready today is one of those skills that you want to learn and amplify. All right. So again, scans, actually 4 things: edge, scans, trading game plan today, tracking journal, something you plan to trade. Okay. So if we continue to work our way through, we just mapped out, we're looking for DocuSign, some other ideas in the group that are at or near a swing trade opportunity now: Qualcomm, Snow, NTNX, TSM, STX, and ANET. Qualcomm and Snow are really interesting ones heading into the new week. Both of them just recently broke out of new opportunities. Snow is actually kind of knocking on the door at this particular moment as well. So let's talk about Snow here for a second. How would we handle trading Snow, knowing that pretty much every time it's gotten up to this price level, it keeps getting shot back down, even though it's got plenty of reward potential? Now, this is really kind of the final thing I want to make sure that we talk about here today. When you have a stock that is knocking, and can't get through, but you look up and you're like, oh my gosh, there's blue skies above that thing. Look at all that profit potential. We have to first manage the downside and let price discovery finally push it through there or not. Because really right now, the last 5, 6, 7, 8, going all the way back to the middle of 2022, price discovery around this 192, 190 level in Snow. And you can see this here. Price is trying to determine who's got the more strength, supply or demand. Supply. And now we're testing it again, right? So we want demand to finally get up and push it through this level and hold it there to participate in all of this move. Now, here's really where this is kind of like it's kind of advanced, but it's really not. It's like if we can acknowledge that the price discovery going on in SNOW around 190, 192 is a battle. If we break out, let's say that we have this one giant candle through 192, big volume, looks beautiful, right? This is a lot of price action that has been battling out from an initial position size perspective. So in other words, if I put my first piece on in that trade, what is the right initial position size based on the way that stock has been battling it out? If it's one time we finally blast through there, what is the right size? Do we get all excited and say, finally, let's go? Or do we do it smart and say, prove to me you're going to stay there more than one day? The traders that last say, prove it to me. So you put on your initial position size. If it stays there one day, couple of days, hovers, maybe even takes off, you can start to build the position as you get more feedback. Now, this is different from if this stock was trending, went sideways, paused for a week or so, and then took off. That second scenario already has existing bullish order flow. It just paused, pulled over at the station for you to get involved, and that move would have been a little bit more aggressive. You'd be like, oh my gosh, that would be great. All right, well, we just showed you one here. So think about the difference in these scenarios where this thing pulled over, gave you about 2.5 weeks to say, oh my gosh, look at what's going on for my scans, and gave you this nice big $13, $14 move taking off. And we started to see that recently with some of the other financial stocks, Morgan Stanley, Goldman Sachs, and Schwab, SCHW Schwab. Okay, so what we're basically setting up here is we're setting up that coming into this week, there's massive news coming out this week. And we need to know that. Again, use the analogy or metaphor, whichever one it is in your head. You're looking at your GPS, you got into the car and you can see ahead, there's like red lines all over every road that you're working on, that there's traffic, potential traffic ahead. So if we know that, we have to plan for this week, which means that the ideas that I'm mostly looking at this week are stocks that are just emerging from some sort of a pause, have sufficient room to go. And I'm not necessarily going to be looking at some of the stocks that are extended, have these giant green candles. Now you need to wait for those stocks to set up what we call a new optimal entry. So technology I'm looking at this week, of course. Consumer cyclical I'm looking at this week, of course. And we just talked about financials. Those are really going to be the three. Energy, we're going to look for that accumulation that we saw in Chevron. We're going to pay attention to the crude oil numbers that are coming out this week. Maybe, just maybe, that good swing trading sector will light up again and give us some new opportunities like it gave us over the summertime when we had a nice 2.5 month rally and participated in that one in a big way too. So a lot to unpack here this week. Click on that link for the economic data. I think that was investing.com. Look at all the stuff that's coming out this week. Figure how you want to trade around that this week. Know your earnings heading into this week. Know your levels and know your risk reward this week. And let's talk about this again next Monday. Have an awesome week, everybody. If we did a good job today, do me a favor. Hit that thumbs up. Hit that subscribe button. And I'll speak to you soon. Okay? Take care. Thank you so much.